Folks, there's just no way to avoid all these great companies reporting earnings. There's no doubt about it. So many fantastic companies reporting, and we're having some pretty good results so far. I mean, every one of the big tech have reported for the most part, and we've seen great numbers. Followed here by Amazon, which we'll talk about right now, just reporting now at 4.5%. Crazy to think about it. Obviously, this is a company I expected incredible numbers on. You think about how really this last year has tailored their business for success more than anything in the past. And not just temporary success, because we see in some facets, some companies will see temporary success. But a company like Amazon, when it gets people on the platform and takes care of them properly, these are people that are going to be customers really for life on the platform, unless there are some catastrophic issues that come later down the road. But for the most part, it gets people on the platform that weren't on it before, even if they weren't, or people just buying more on the platform than they did before. And that's not a trend that's going to stop just because things reopen. It won't be, unfortunately, for you. Just being honest. People are going to enjoy the convenience of it, and they'll stick to it. You look over the last year, and I mean, obviously the market's been quite favorable to it. The stock's honestly only up 40%, but if you look over the last 5 years, you see a much different picture. Really, since March of 2020, the stock's up closer to 100%. So, just to put that into perspective. But the last year for it hasn't been that incredibly incredible, I guess I could say. Is that a fair way to say it? Let's look at these earnings, though. I'm excited. Fudge. GAAP EPS of $15.79 is a beat by $6.18. Good golly. Also, I must say, that is probably first of all, that's an incredible beat. Nearly double their expectations. We're talking probably 1.7 to 1.8 times what they were expecting, which is incredible to see. But what is even more crazy, and I think anyone else can admit this, revenue line here, $108 billion, up 43%, is a beat by $3.89 billion. I don't know how that's feasible. I've talked about with this a lot of these companies. They're reporting earnings that I just can't even imagine how it's possible. You're talking about an increase. I don't know how that's possible. I mean, you're talking about an increase of $30 billion in a year's period. How can that be done? Closer to $50 billion. But I just don't know how that can be done. Over $40 billion increase in a year's period. It's Amazon. What can I say? This is the company tailored to the future. They're doing incredible numbers, and that beat is just incredible. I just don't see how they could possibly raise revenue by such a significant margin consistently. But here they are. They're doing it. Net sales expected to be between $110 billion to $116 billion, or to grow 24 to 30% for the next quarter. That's incredible. Favorable impact from 200 basis points from foreign exchange rates. And the consensus is only $108 billion. So way over the consensus. I just think that's an incredible number. To possibly be able to grow over 20% against really a year that was the most beneficial year out of any, for any business ever. 2020 was substantial for them. This is the first quarter of the pandemic for them. And if they could grow business year over year on that by that large of a margin, I mean, this company's just incredible. It's unstoppable. Operating income expected to be between $4.5 billion and $8 billion, compared with $5.8 billion in the second quarter of 2020. So a little bit in the mid-range there, probably on the upper end, which would be nice. Yeah, pretty nice. Let's look at some of the finer details. Well, Amazon shares are up 3%, as we saw. Obviously, their rumored stock split didn't happen. Pretty nice to see. I'm okay with that. Amazon web sales up 32% on the year, which is nice. Consensus was only 22.5, so to see the cloud growth going there is nice. Online store sales totaled $52.9 billion versus a consensus of 50.3. Operating income at 8.9 compared to 6.1 billion consensus. That's crazy. Fulfillment expenses were up at 16.5 billion compared to 16.1 expected. A little bit up there, not too crazy. That's crazy. I mean, that's crazy. Prime Video streaming hours are up 70% on the year. This company's just doing some incredible stuff, okay? Let's look at the press release. I don't know how much more I can really get impressed with this because it's just, I mean, it's good. We'll zoom in for you. I'm a generous guy. I'll just be honest with you. I'm generous. I'm quite generous. Net income line, we do like looking at that. $8.1 billion compared to $2.5 billion in the first quarter of 2020. Quite an increase year over year. We're talking about 3 times the amount there. It's quite an increase, over 3 times the amount of net income. Hey, when I see an over 200% growth, I'm pretty stoked for that one. So, obviously, in terms of highlights, there's nothing super crazy here. Ranked number 1 in the U.S. on LinkedIn's 2021 top companies. Obviously, pretty nice for them. There's good things to say. They obviously reward their associates quite a bit. They do work you to death, I'll just tell you that right now. But good place to work, all things considered. Everything else, it's just kind of just, some different parts of their business. Supporting communities, not a segment I really necessarily care that much about. I'm here for the data. Some investors might care about that, but I'm not quite there. Climate pledge, yeah, I can skip that one. Empowering small and medium-sized business, it's a good thing to do. But again, not super crazy. These business updates, they're nothing really that crazy. I think on here they do mention, which could be pretty incredible. Amazon is the exclusive host of Thursday Night Football beginning 2023. Pretty nice. So that's a benefit in terms of the streaming segment for them. If you haven't seen that news either. So I do want to look at the balance sheet because there's just incredible number out of this company. Incredible numbers. It's coming up. I want the world to know. I said it. Total current assets on this company. It's on the far right this time instead of the left. It's confusing sometimes, okay? Companies do it differently. $121.4 billion compared to $132.7 billion. Decrease in cash and cash equivalents. Likely, there's a chance to pay down some debt. We'll see what that looks like, though. Total assets in general at $323 billion compared to $321 billion. Looks like they may have converted some of that into property and other assets. That could be part of it. Total current liabilities did decrease, so again, they did pay off some of that, 115 compared to 126.3. So yeah, all things considered, they decreased. They did decrease their current assets, but also decreased the current liabilities by just as much, really. So they pretty well sold off or really paid off some of this accounts payable, as well as some accrued expenses. So long-term debt saw a slight increase on this company. Total stockholder equity right now sitting at $103.3 billion compared to $93.4 billion. That's a really good number. You're talking about growth of $10 billion in just a quarter's time. This is 3 months' time on this balance sheet. So it's a really good balance sheet from this company. They're putting up great numbers. It's not a shocker. What can I say about this company? I mean, we're talking about a company bringing in this year probably darn close to $500 billion. Can't lie to you. And it's only trading at a market cap of $1.75 trillion. I say only. It's incredibly expensive, $1.75 trillion. But the company's going to be bringing in a third of that, nearly, in revenue. Nearly a third of that. If we want to be fair, let's say a fourth. That is a cheap stock compared to a lot of the market right now. PE ratio runs a little bit high. After today, probably going to be sitting under 80 for sure. It'll be in the 70s. Could be even higher. We'll see what it looks like. Forward PE is going to be sitting closer to probably around 40-ish range after this comparison here. So it's good to see these numbers. Amazon's doing gangbusters. This is a stock I think still worth buying because regardless over the next 5 years, whatever happens in the short term to this market, over the next 5 years, Amazon's going to be a lot higher in 5 years than where it is right now, even at $3,400. Just throwing that one out there. This is the company of the future. I can't deny it. Hope you have a good day.